Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is April 13, 2015. Inside the numbers tonight, we're going to talk about the SPY and the E-mini contract, and we'll decide whether or not we saw a daily top today, which could be of importance. And that's a little teaser for you. We'll get more into that, of course. Crude oil, we had a nice trade. We're going to review that and see what's next. We'll talk about the gold market. We should see a rally coming soon. Interest rates in the bond market. And we'll touch on the dollar most likely, and then we'll give it a wrap. So let's go over to the SPY. Here's a daily chart. Here's a little down day. It looks like a blurb. But if we go over to the intraday chart, you can see that basically from mid-morning, 10:30 a.m., the market just rolled over all day. And that's basically a distribution day, which means that the institutions are basically unloading stock. That's basically what happened today, especially this afternoon. So what's this business about a daily top? What does it mean? What can it do for you? And where do we go from here? So let's go over to the daily chart. And so what we have is, this is a weekly. So what we have is we're in a time period for a pullback. I'm not even going to call it a correction. They'll call it a correction. But all in all, we need a pullback, okay? And most likely we're going to get it this week. It's during options expiration week. And there's probably going to be maybe one, maybe two more pretty good down days this week. Is tomorrow going to be one of them? I don't know, but my gut tells me no, and here's why. Because just as the market looked like it was rolling over today, I'm sure there's a lot of people that loaded up on puts, and basically the market knows that, the institutions know that, and its job and their job is to shake them out. Their job is to whip the market back up tomorrow, shake out the weak hands for the put buyers that just bought today, and then they'll probably take it back down the following day. Now, is that a definite going to happen? No, I don't know. But I've seen that so many times that all that is experience talking, not a high probability trade setup. It's just I've seen it so many times I wouldn't be surprised. That's all I'm saying. All in all, it doesn't really matter. The point is that we're going to see more downside this week, and maybe even into next week. So what is that going to look like? That's the question everybody wants answered. So I'm going to hop over to the E-mini contract, and then we'll come back to the SPY, because my numbers I have calculated are on the E-mini contract. So basically what I have is 2060 to 2070. So we're going to call it 2065. And 2065 is going to be a pierce of the 200 and the 50 period moving average, the red and the blue lines. And it's also going to coincide with around a 50% to 61.8% retrace from this low here to this pivot high from Friday, or today, if that was the high. Okay, so on the SPY, okay, what that means is, in fact, it's from this pivot low here. I might have told you the wrong number. Let's go back to the other chart. This pivot low. Yeah, I think I said the right thing. Okay. So it's even clearer if we go to the hourly chart, and let me show you where the numbers come from. And this isn't the only calculation I did, but this is a common calculation, but I have validated these numbers elsewhere. So here is a fib retrace. Okay, our 50% retrace is 207.39, 618 retrace is 206.63. So we're going to call it 206.5 to 207.5. Let's get rid of these lines, and then we'll show you a visual of where that falls on the daily chart. It's easy to see. Okay, 206.5 to 207. So let's call it 7.5. So let's call it 207. All right. So our number is 207, give or take. All right. So we can expect the market to pull back this week into the 207 neighborhood. Now, could it go farther? Sure, it can, of course. But we have to see the velocity and the pattern it takes to get there until we want to determine whether or not there's more downside to be had. So we have to take it one step at a time. I would love to say by Friday the market's going to be at X number like we did last week. It was a different kind of indication I had. It's a different kind of number. It's a different kind of calculation I'm doing, okay? Here, I have to calculate, if the market's turning down, I have to calculate how hard the market turned down. Was it on high volume? What was the velocity like? Where was the money flow? And when we can determine all those things, then we can determine how far it should go until we find support. So right now, the first early case indication is, let's call it 207. 206.5 to 207.5. We're just going to round it in the middle and say 207. That's where the market's headed, give or take, this week. Okay, that much I'm pretty sure of. Beyond that, we'll have to see when we get there, but we'll keep talking about it all week, and we'll give you the roadmap as we get there. But remember, since it's options expiration week, don't be surprised to see the market bounce up tomorrow and try and fake everybody out, thinking that it was just a one-day wonder on a small down day and everything's good again and we go up from there. That's going to be the sentiment in the morning. They'll forget about today if the market's up in the morning. But just beware, it's options expiration week, so it's going to whip around all week long. All right. Let's move on and let's go over to the gold market. I'm sorry, the oil market, and we're going to talk about the trade we had a little bit and what's next. So I'm going to go to the hourly chart, and we had a number of 51 was very important to us. 51 right here. Okay, 51 was very important. Remember here, 51, we fight 51 above, below. We fight 51. Finally, we break above 51 with conviction and volume. We issue a trade alert, and we go long the market looking for 53. And what happened this morning? This morning at 10 o'clock in the morning, the high is 53.05, and that's good enough for me. We're out, and that's the end of the trade. Now, is there more upside in oil? That's the $100,000 question. And I believe that there is, but I just don't have a definitive calculation, a definitive indication that we're going higher to this number and around this time frame yet. So we're going to have to sit on the sideline until I get a more definitive tell from the market giving us a high probability trade. I don't have it today, but we should have it in a day or two, depending on how the market reacts off this move from today. And it was a pretty good move, right? So we issued the trade alert on Friday. Where did we issue the trade alert? We said we were going long oil down here. 51, 30, 40 area like that, and we go up to 53. And in terms of oil, crude oil futures contract, that's a pretty good move. There was a lot of ways to play it. I played it on the portfolio on a double long oil play. You could have played USO. That's a 1 times. I played it 2 times. There are 3 times. There are options. There are futures. There's just a myriad of ways to play these kind of things. And depending on whether it's short or long term, or whether or not how confident I am in the target price determines how I'm going to play the trade. So this one I played with a double long. We got about a 4.66% return on it, and that was in a 1-day hold. So that's pretty good. I'll take that all day long. Let's go over to the gold market. And what do we have in the gold market? We have right now $1,200 an ounce. We had a little bit of a drift down today. We didn't have any action today. We just kind of opened lower, stayed lower, nothing going on. But I believe there's higher prices coming, and even though I don't believe in the philosophy that the dollar is tied to gold and gold is tied to the dollar, and when there's a weak dollar, higher gold and all that stuff, because we've seen gold rally when the dollar rallies, we've seen it fall when the dollar falls. So to me, all that's nonsense. It's just coincident correlations when they do exist. They're convenient to discuss, but they don't always exist. However, this week, I'm thinking the dollar's going down, and I'm thinking gold's going up, and I'm thinking they're going to reissue the correlation in the media saying the reason gold's up is because the dollar's down, and that leads me to oil, and if that happens, I think we could see another pop in oil, but I don't have the indication yet. I don't have the high probability setup. I'm just giving you my thoughts. I'm kind of doing a data dump and saying, here's what I'm thinking, so I'm looking at these potential trade setups, and if I see these actions unfolding, I'm more likely to put on this type of trade setup, and I tell you this so that everybody's prepared. That's simple. So back to gold. So I think that there's higher prices in gold this week, at least to the 1212 area. I would suggest we should see back up to this double top area, or maybe a little beyond from last week. We should see that again this week, a test of it. And depending on how we get there and what kind of volume is behind that move will tell us whether we see higher prices following 12.12, 12.10 to 12.12 or not. But I do think that's coming this week, but that's the best I have. I can't say it's going to happen Tuesday, Wednesday, Thursday yet, but Thursday's an important day. Everybody should be aware of Thursday. There could be a big move on Thursday, and depending on Tuesday and Wednesday, and that's just not gold, that's all markets. Thursday could be a big turn day for all markets. It's something to be very, very aware of. If we're up into that time by chance, it could be a big down day. It could be a big anything day. There's no way to tell yet what's going to happen, but keep in mind, Thursday should be a pretty big day in one direction or another. All right. Looking for higher prices in gold. GDX, same routine. As goes gold, so goes GDX. Gold down, stock market down, GDX down. In order for GDX to be up, you have to have at minimum of one of the two, gold or the stock market, preferably gold and the stock market up, and you should see a further rally in GDX. Where can that rally take us? Well, if we flip over to the daily chart, basically, I'm not sure that we can get beyond this double top here, unless we see a lot of velocity, a lot of momentum behind the move. But right now, because I don't see extreme higher prices in gold today, it doesn't mean 3, 4, 5 weeks from now that story doesn't change. I'm just saying right now, over the next 3 to 5 trading days, I don't see much higher prices beyond 12.12, and if we get them, maybe it's 12.20. And if that happens, we may be able to squeeze it up to double top here, not this double top, but this one, which would be about $21 for GDX. I just don't know if we can get higher than that on this move. But here's the good news. So far, we've had a low, a higher low, higher low, higher low, maybe higher low here, depending on what happens tomorrow. But that's good news. That's bullish. But we have to see more. We just haven't seen enough to make a definitive argument in one direction or the other. Bond market. Bond market was a little bit whippy today. This is actually a bullish pattern, folks. And I am expecting the bond market to rally this week if and when the stock market does pull back and correct a little bit. If that doesn't happen, I would be surprised. But if it does happen, the top end wouldn't be much beyond this double top here, 132, 133. Up to 133 would be this gap fill here, 133.30, and then this pivot top here. I don't see a move much beyond that, and frankly, it's not an 80% probability, high probability trade. So even though I do see it happening, I don't see it enough of a risk reward in order to take a trade right now. So we'll wait for a better setup in the bond market in order to take a trade. And this is one of those cases where sometimes no trade is the right trade. Right now in the bond market, no trade's the right trade. Let's go over to the dollar. Interesting, because I have lower prices on my radar screen for the dollar this week. Now, this is a bearish pattern. Okay, this is the hourly chart. You're making sideways, what's called consolidation pattern here, and this is a bearish pattern. On the daily, you can make a case one way or the other. This doesn't have to be bearish. This doesn't have to be a doji. This doesn't have to be a topping signal. It doesn't have to be anything. What this is a bullish market, but there's a market that I believe is going to pull back. I don't know that we get into our zone that we want to buy it at, but what I do know is we should get at least to the 20-period moving average. And again, like all markets, if we get there with high volume, high velocity, we could see lower prices, but we won't know that till we get there. But if we see a dollar pullback, we should see some kind of a rally in certain commodities, namely oil, possibly gold, and some other commodity-related markets. Silver being one of them as well, by the way. We don't talk a lot about silver. It usually goes with gold. But anyway, so I see the dollar going lower, but any pullbacks of significance in the dollar have to be considered buying opportunities, and I'm going to consider them buying opportunities. So I'm not sure that the buy I'm going to make is going to be in this zone, but I am looking for lower prices in the dollar this week, which would mean higher prices in the euro. And we'll see how it pans out, but we'll know more tomorrow. But that's what I see on the horizon. I think I covered everything I wanted to. We got to the stock market. We did the bond market, gold, oil, the dollar, GDX. I think we got them all. Let's give it a wrap. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks, everybody, for tuning in.